Markets head into Thursday with geopolitical risk firmly back in the driver's seat, keeping investors cautious despite another busy earnings season and an important European Central Bank decision later today. The dominant macro theme remains the escalating conflict between the US and Iran. The United States has begun a 12th consecutive night of strikes on Iranian military targets while continuing to reinforce its military presence across the region, raising the prospect of a broader conflict. Shipping risks through both the Strait of Hormuz and the Red Sea remain elevated, helping to keep a significant geopolitical premium embedded in energy markets. Oil prices have pushed higher once again, supporting energy-related assets while weighing on broader risk sentiments. In FX, the US dollar is mixed but remains generally well supported by higher Treasury yields and defensive positioning. Treasury yields continued to grind higher on Wednesday following another week long-dated Treasury auction, reinforcing the view that markets still expect US monetary policy to remain restrictive for longer, with the Federal Reserve now in its blackout period and little in the way of U.S. economic data. Yields and geopolitics are providing the primary direction for currencies. The euro is in focus ahead of today's ECB policy decision. Rates are widely expected to remain unchanged, with attention instead centered on President Lagarde's guidance and whether policymakers continue to leave the door open to additional tightening later this year. Euro-dollar remains trapped in an exceptionally tight trading range, with today's meeting carrying the potential to finally provide a catalyst for a breakout. The yen continues to trade under pressure as widening U.S.-Japan yield differentials offset traditional safe haven demand. Dollar-yen remains close to multi-decade highs, although intervention risks from Japanese authorities continue to limit upside momentum. Meanwhile, commodity-linked currencies such as the Australian and Canadian dollars are finding some support from stronger oil prices, although broader risk aversion is preventing a more meaningful advance. Equity markets have lost some momentum. U.S. indices erased early Wednesday gains to finish modestly lower, as higher bond yields and geopolitical uncertainty encouraged investors to reduce exposure ahead of a heavy slate of corporate earnings. Alphabet delivered strong results after the close, while investors continued to digest earnings from Tesla and other major technology names, leaving AI and large-cap tech firmly in focus. Looking ahead, today's key event is the already mentioned ECB rate decision and President Lagarde's press conference. Beyond that, markets will continue to monitor developments in the Middle East, corporate earnings, and any fresh headlines on U.S. trade policy after Washington indicated it hopes to secure interim trade arrangements with Mexico and Canada before year-end, although ongoing tariff tensions with Canada suggest meaningful progress may prove difficult. That's all for now.